Your total addressable market now up to $900 million. It is great to have you here after that investor meeting. You're looking out to 2030. What gives you that confidence?
Look, we have been, first of all, great to be here talking to you, but we have been on this trajectory since 2021 when we had our last investor day and we outlined the plans to grow the company to other markets. We realized that the technology we produce for mobile could be very disruptive and we could build actually a leading position, what we did in automotive, what we did in PCs. And we thought would be the right thing to tell investors as we look in the next 5 years, how we're going to diversify the company. When you look at the company right now, most of our revenue is mobile. Mobile is a great market, but it doesn't grow as much until we have an AI upgrade cycle. However, those other markets that we're going, it will drive higher multiples. So as those revenues from non-mobile become a bigger percentage of Qualcomm, we have an opportunity to actually see a multiple expansion. So we want to outline to investors our trajectory. And what's exciting is really where we are right now. We're very happy with the results of the company in the near term. We show on the last earnings call, we're growing in all markets, including handsets. And we put out in 5 years, we're going to have $22 billion of non-handset revenue. But bearing any cyclicality on the market, we expect to continue to grow annually into those targets.
Bearing any cyclicality, can you just talk through what are the downside risks to automotive demands, to people actually upgrading to new and refreshed Android phones, which are going to remain?
Yeah, what I mentioned about cyclicality, I think the semiconductor industry, we have seen on the past few years, we had a bunch of different cycles, different markets, inventory corrections, we have capacity constraints. We're not assuming that going forward, but some of that could happen. But when you look of the normalization of the market we see right now, if that continues, we feel very good about the ability to grow annually. To your question is, cars is one that we're incredibly excited because people are now buying new cars because of the computational capabilities and those big screens and the digital capabilities of the car. And I think that's what actually creating demand for our technology.
Going in, before we get to cars, the Internet of Things is really going to be something that we've been talking about almost for a decade, the Mobile World Congress. And remember, everyone's exuberant about Internet of Things. And then reality never quite gets there. And that's where previous times you've made targets and perhaps have had to fall short because the ecosystem doesn't build. What makes you sure it will get to that 14 billion this time?
Like, we're very confident, but I would like to break that down for you.
Yeah.
So first, PCs. Because actually what I need to tell you is we talk about Internet of Things, but the Qualcomm Internet of Things revenue stream, there's a bunch of things in there. We have PCs, we have virtual reality, mixed reality devices, we have industrial, we have networking and personal devices like wearables and watches. That's our Internet of Things bucket. So we gave a target of $4 billion in PCs. If you think what we're doing right now, Snapdragon X Series is the fastest processor. It's faster than Intel, faster than AMD. We come in the industry as a new player with a leading platform. The only platform that could run Microsoft Copilot+. If you look at this, of the service market, the TAM or the SAM that we're provided Investor Day of PCs in 2029 is 35 billion. We say we're going to do 4. It's very achievable target, especially when you think about we have the best platform in the market today.
But everyone does indeed love that silicon. Our own Bloomberg Intelligence saying your silicon in the AI PC is great, but there's been so much cynicism around the adoption of ARM-based PCs. What is stopping that?
We actually see a little bit different. We launched this platform in May. We have 20 designs. Right now, from May to today, we increased the design traction by 2.5 times. We have 58 now platforms across Dell, HP, Lenovo, Samsung, Acer, Asus.
And people are buying them?
And the sales are exceeding our expectations. So that's why we feel confident. And if you think about the target, we put in 4 billion in the 35 billion SAM, it's not that high. The other one is industrial. Right. And you asked me about IoT. One thing, Caroline, did change the IoT in industrial is AI at the edge. The ability to run AI at the edge. We can run multi-billion parameter model into a device at the edge, that changes the cost equation for a lot of companies that actually think that it's going to be cheaper than doing it in the cloud, or they have specific needs. That inflection point is what gives us confidence we're going to get $4 billion in industrial by 2029. And the other $2 billion we provided was for augmented reality and the Ray-Ban Meta Smart Glass. Everybody talks about it. It's probably the favorite Christmas gift this season.
Let's talk, therefore, about an inflection point when you go back to what had been your bread and butter, which is smartphones and cells. Are people upgrading? Are they going to upgrade, particularly on the Android devices that you sit with? Because Apple is, of course, going to be pulling back for the next few years.
Look, Android is the largest global market for handsets, and we have been very focused on premium tier Android. What we've seen in the market that grows very, phones grow with GDP, right? It's flat to single digit growth because everybody has a phone. However, what we have seen is that the premium tier, they're growing significantly. We see a mix change. When people buy their next phone, they want a better phone. And that actually allow us to be growing, in many cases, like double digit on a market that doesn't grow by expanding content. So what we expect is that is the trend as people buy a premium smartphone with more AI, and eventually, as the AI use cases start to be as big as apps, we're going to see an AI-driven upgrade.
We are sitting with the Qualcomm CEO Cristiano Amon for our worldwide radio and TV audiences. The upgrade cycle grows with GDP, you were saying. China's GDP not looking so great. You have exposure to that economy. What does it feel like right now?
Look, our China business is a business that we're very happy with it. As geopolitics evolve, actually our business with China expanded, especially because as we become relevant in automotive and industrial beyond phones, we have Chinese customers. I think at the end of the day, regardless of GDP growth, China is a big market. If you are a semiconductor company that you have a leading technology that cannot be replicated by a domestic product, you're going to have a big business in China, and that's what we have.
But they're fighting to make things domestically because of the new administration, and indeed the current administration, still pushing back on China. That you don't have any pause, any concern about tariffs ramp up, for example?
Look, you should think about our business. We are exporting semiconductors. We're in the right direction of trade for the United States, especially when you think about trade balance. And if we have a leading technology, we expect that China will be interested and continue to buy our chips. So we're not concerned about that.
You don't have any procurement issues? You don't import anything? You're not having to stockpile?
No, I think we have been, we're a fabulous company. And we have been a big exporter of chips into China.
You've got an amazing bird's eye perspective of the technological race that we like to talk of between US and China. For example, you've got an array of large language models within your Snapdragon mobile system and platform. Some of those are Chinese large language models. How do they perform compared to the US ones?
Look, we can talk about this all day, but I'm going to try to summarize a few things. There's a very large number of models becoming available, and they're very specialized. I think we're heading towards AI as being a new computing, and you have models that specialize in voice, major specialize in imaging, like large visual models, etc. What we're starting to see is a lot of those models are becoming regionalized, especially when you think about text and conversation. As the computer starts to speak the language of humans, every region has a unique aspect that is driving a lot of regional models. We expect the future is going to be like that. China's going to have their models. Europe's going to have their models. We're going to have our models. And they're going to be models specialized for different things. And we're just the beginning of this exciting new transition.
You could talk about it all day. The thing that the markets, that the media have wanted you to talk about all day is whether you'll be making any acquisitions and whether you will potentially be making any acquisitions of Intel parts of the businesses. Your CFO outlined that, look, you're actually going to be giving money back to investors. Is M&A therefore not on the agenda?
Look, we have always been looking for opportunities. A lot of the Qualcomm M&A framework with the outline has been opportunistic or been very targeted to accelerate our plans. We has showed that with the M&A that we've done for auto, the M&A that we've done to enter the PC space. So you're probably going to continue to see Qualcomm doing that. Right now, at this point, we have not identified any large acquisition that is necessary for us to execute on this $22 billion. And we're super focused on executing on that $22 billion in the next 5 years.
So give us the confidence, give the investor base that's currently seeing perhaps your share price off by 6% at the moment, give them the confidence that this transition away from Apple and focusing in on Android, but focusing in on the Internet of Things opportunity that you articulated, the autos, you're going to get there smoothly and with clarity on time frame.
Yeah, look, the way I see it, and I think that's probably, I can't really, talk about what's happening with the stock, but I think there may be some confusion. Our plan in the Investor Day is to tell investors that our strategy is working. We don't need a new strategy. It is working. We had executed on what we said we're going to do in those new markets, like auto, for example. We have 5 consecutive quarters of record growth, and we would grow even when the market doesn't grow because we're gaining share. We had deliver on our entrance on the PC and are well positioned to ramp. And we told investors how this is going to play out with the other markets. We had said since the beginning that our planning assumptions assume that Apple is coming off the model. We had said our contract implies that we have 20% share in 26. Will that be the case? I don't know. I think we have had 2 renewals of Apple, but we have to make a planning assumption that Apple's coming off the model. Even with that, we are well positioned to continue growing through the period and get to a point in 2029 that we have $22 billion of revenue non-mobile. And when we get to the end of the decade, we have a potential about 50-50. Mobile is about 50% of the revenue from growth markets. So I don't know what the anxiety is, but I think we feel confident about the plan and we'll continue to execute on that plan.